Hi everyone, it's Erika, and welcome to another edition of Logo Quick Takes. I'll be recording tons of earnings quick takes each day over the next 4 weeks, but I wanted to talk about a big picture theme playing out in markets today. There's a lot of confusion about why megacap tech and a handful of other very popular stocks have had meaningful pullbacks and haven't performed very well lately. There's a lot of reasons, and sometimes they are very specific to each company. But there's one thing few are talking about: capital flows. Money moves where it gets treated best. For the better part of the last 16 years, the best returns came from simply making 3 decisions. 1. Buy megacap only. 2. Buy growth, ignore value. And 3. Buy US and ignore international stocks. Within the growth trade, the returns largely came from just buying tech stocks. As this strategy paid investors well, more and more money went into tech, about $4 trillion in fact. When you do something and get rewarded, you do more of it. When you keep getting rewarded, you get complacent and your positioning gets oversized. And that's when sucker punches happen. A funny thing happened in 2025. International stocks outperformed US stocks, which siphoned some capital away from the US. Since the market is driven by passive ETFs, that siphoned money away from the largest sector in the market, technology. Enter 2026, and emerging markets are outperforming developed international, which is outperforming US markets. Value is beating growth, and smaller is outperforming megacap. So you have this capital flight from the most crowded trades, and the sheer size of the flows are having outsized effects on the crowded trade. Oh, and these megacap tech stocks are transitioning from capital-light, free cash flow machines to capital-heavy CapEx machines, where there's massive investment in AI build-outs, which is putting pressure on the multiples. That's a lot of potential headwinds for a sector, folks. Perhaps that's why seemingly solid business reports and guidance is still being met with selling. Oh, and there's a ton of high-profile private tech companies slated to go public in 2026. Where's the money coming from to buy these super hot IPOs? That's right, it's coming from the most crowded trade in history, megacap tech. So for now, there's some headwinds that are sitting in front of these great brands, so don't lose your mind trying to figure out why great earnings are being met with poor responses. It's the flows, silly. Thanks for listening.